The modern world is built on an illusion so deeply embedded into everyday life that most people never stop to question it. We assume the global economy runs on software, capital, and innovation. We assume the great battles of the future will be fought over artificial intelligence, semiconductor patents, and control over digital networks. We assume industrial metals are old economy relics, dull raw materials buried somewhere beneath the glamour of modern finance. But that assumption is not just incomplete, it is dangerously false. Because beneath the surface of every electric vehicle, every power grid, every military platform, every artificial intelligence server farm, and every major industrial expansion plan on Earth sits one brutal physical truth. None of it functions without copper. Copper is not a side character in the 21st century economy. It is the bloodstream. It is the wiring behind electrification, the transmission line behind energy expansion, and the conductive skeleton behind the digital systems that governments and corporations now describe as the future of civilization itself. You can print currency. You can create software, you can subsidize demand, you can promise industrial transformation in glossy policy documents and investor presentations. But you cannot digitally summon millions of tons of refined copper into existence. You have to find it, dig it, move it, process it, refine it, and deliver it through a physical world governed by geology, time, energy, and political control. And right now, one nation has understood that reality far more clearly than the rest of the planet. China is not merely buying copper. China is positioning itself around copper with the cold patience of a state preparing for a future conflict that much of the world still refuses to acknowledge. The real story is not just about rising imports, warehouse inventories, or commodity demand forecasts. The real story is that Beijing appears to be treating copper not as a normal industrial input, but as a strategic pillar of national power. And if that interpretation is correct, then what looks today like stockpiling could become tomorrow the decisive leverage point in a global commodity war that the West is structurally unprepared to fight. To understand how severe this problem could become, you have to begin with the great economic transition now underway across the world. Political leaders in the United States, Europe, and Asia are all promising versions of the same future: electrify transportation, expand renewable power, build new transmission systems, scale battery manufacturing, construct data centers capable of handling the exploding computational load of artificial intelligence, reindustrialize supply chains, modernize defense production, digitize infrastructure. Every one of those ambitions sounds distinct on paper. In physical reality, they all compete for the same conductive metal. An electric vehicle requires dramatically more copper than a conventional internal combustion vehicle. Charging infrastructure requires still more. Wind turbines, solar arrays, substations, transformers, and high-voltage cable systems all consume enormous copper volumes. AI data centers, celebrated as the command hubs of the new economy, require massive electrical systems, cooling systems, and internal wiring networks that depend on copper at scale. Even military modernization increasingly rests on advanced electrified systems, guidance networks, communications hardware, and power-intensive manufacturing processes that cannot function without reliable access to refined metal. The future the industrial world keeps promising is at its core a future of massive copper dependency. That would already be a serious strategic problem if supply were abundant and elastic. It is not. Copper supply is constrained by the slow, punishing realities of mining and refining. The best ore bodies are aging. Ore grades in many major producing regions are declining. New giant discoveries are becoming harder to find. Community resistance, environmental litigation, capital costs, permitting delays, and infrastructure bottlenecks can stretch mine development timelines well beyond a decade. In many jurisdictions, it can take 15 years or more to move from discovery to meaningful production. That means the world is charging directly toward a future of rising copper demand while relying on a supply system that physically cannot respond at the speed policymakers and investors expect. This is where the Chinese strategy becomes so unsettling. Beijing appears to have recognized long ago that the most powerful position in a resource-constrained future is not simply to consume copper, but to shape the conditions under which everyone else can access it. Over the past 2 decades, Chinese firms, often backed directly or indirectly by state power, have expanded aggressively across the upstream mining landscape. They moved into the copper belts of Africa. They deepened influence in Latin America. They used financing, infrastructure investment, trade relationships, and long-horizon state planning to secure access where Western institutions often moved slowly or not at all. This strategy did not need to look dramatic in real time. That is precisely what made it effective. It unfolded through mine stakes, processing agreements, long-term offtake contracts, smelting expansion, infrastructure loans, and logistics control. While many Western corporations remained trapped inside quarterly earnings logic, Chinese entities often operated on a far longer clock. They were not simply asking whether a project maximized near-term shareholder return. They were asking whether it increased strategic control over a metal that would become indispensable to the next phase of global industrial power. Control over mines, however, is only part of the picture. The far more important layer is refining and processing. Raw ore in the ground is not the same thing as usable industrial metal. If a country can influence not only extraction but also the smelting and refining bottlenecks that turn raw material into functional supply, it gains leverage over the entire industrial chain. This is where China's position becomes deeply uncomfortable for the rest of the world. It has spent years building enormous domestic processing capacity, allowing it to occupy a central role in the conversion of mined copper into refined copper products. That means even when copper is extracted elsewhere, the strategic value chain can still bend back toward Chinese industrial infrastructure. The result is not merely market influence, it is systemic leverage. The more the world moves toward electrification and AI-scale infrastructure, the more valuable that leverage becomes. And this is why reports of heavy Chinese copper accumulation have attracted so much attention. If demand were weak and imports remained modest, there would be little mystery. But when large volumes of copper appear to be moving into storage, even as portions of China's domestic economy remain under pressure, the normal explanations start to weaken. Stockpiling on this scale raises a harder question. What if the purpose is not immediate consumption, but pre-positioning? States do not hoard critical materials at scale unless they believe the future will be tighter, more dangerous, or more conflict-driven than the present. They hoard when they expect disruption. They hoard when they expect the international market to fail. They hoard when they want optionality in a crisis. And they hoard when they understand that possession of physical supply during a shortage can deliver far more than profit. It can deliver obedience. The Western world remains psychologically attached to a deeply financialized view of commodities. Traders watch paper prices, analysts publish demand curves, banks discuss inventories, hedging, and macro exposure. Governments assume markets will clear through price. But commodities are not ultimately spreadsheet abstractions. They are physical molecules moving through physical systems. If large quantities of copper are quietly withdrawn from globally available circulation and moved under the control of a strategic rival, the danger is not immediately visible on a trading screen. It emerges later, when the shortage becomes impossible to ignore and the physical metal is no longer where the market assumed it would be. This is how strategic traps are built, not through theatrical announcements, but through invisible preparation. One side treats the resource as a tradable asset. The other treats it as geopolitical ammunition. By the time the first side realizes the distinction, the balance of power has already shifted. The timing matters enormously. The year 2026 has become a focal point in many industrial forecasts because it sits at the intersection of several accelerating pressures. Large-scale AI infrastructure build-outs are expected to intensify. Grid investment programs are moving from policy ambition toward physical implementation. EV and battery supply chains continue to absorb industrial metals even amid market volatility. Defense and industrial policy in the United States and Europe increasingly aim to reshore or expand manufacturing capacity. All of those trends collide within a copper market that is already under strain. If supply disappoints while strategic stockpiles remain locked away, the market does not gradually adjust. It breaks. And when it breaks, the consequences extend far beyond commodity charts. Copper shortage is not a niche investment story. It is an industrial shutdown story. It is a grid delay story. It is an inflation story. It is a defense bottleneck story. It is a data center expansion story. It is a story about whether political promises can survive first contact with material reality. Imagine what happens if major Western manufacturers, utilities, and technology firms all move simultaneously to secure future copper supply, in an environment where inventories are already tight and a large strategic stockpile sits behind Chinese control. Prices would surge, but price alone would not solve the problem. Mines cannot appear overnight. Refineries cannot be built instantly. New supply cannot be negotiated into existence with the speed of a monetary response. The panic would move from financial markets into procurement chains, from procurement chains into production delays, and from production delays into political crisis. At that moment, China would not need to announce a formal embargo to exercise power. Strategic leverage often works best when it remains implicit. The mere knowledge that Beijing controls enormous stockpiles, substantial refining capacity, and upstream influence would shape negotiations across the global economy. Companies would self-censor. Governments would moderate policy positions. Export restrictions in one area could suddenly invite retaliation in another. Semiconductor controls, tariff escalations, maritime tensions, or sanctions disputes could all acquire a new material dimension. The world would discover that copper is no longer just a commodity, it is a pressure point. This is what makes the phrase commodity war so important. A commodity war is not simply a period of high prices. It is a struggle in which physical resources become instruments of statecraft. It is the moment when supply chains stop functioning as neutral trade mechanisms and start operating as strategic battlegrounds. For decades, the United States and its allies assumed that financial power, naval power, and technological leadership would be enough to preserve global advantage. But those forms of power depend on underlying material systems that must still be fed with real-world inputs. If those inputs are controlled elsewhere, then the entire architecture of superiority becomes more fragile than it appears. The deeper danger is that the West spent too long treating physical production as secondary to financial sophistication. It outsourced extraction, tolerated refining dependence, underinvested in industrial capacity, and assumed global markets would remain permanently open under a system it loosely helped design. That worldview now collides with a harsher reality. Strategic competitors do not see resource dependence as an efficiency problem. They see it as a weaponizable vulnerability. China's copper posture appears to reflect exactly that insight. Secure the mines where possible. Expand processing. Accumulate physical inventory. Let rival economies drift deeper into electrification dependence. Then wait. Wait for demand to tighten. Wait for shortages to emerge. Wait for geopolitical friction to rise. Wait for the moment when the rest of the world suddenly realizes that the metal underpinning its future is concentrated in the hands of a rival power that spent years preparing for this exact scenario. And that realization may arrive too late. Even now, much of the public conversation in Western economies remains trapped at the surface. The headlines focus on inflation prints, AI valuations, interest rate expectations, and election cycles. Those stories matter, but they can obscure the underlying physical contest now gathering force beneath them. The countries that will shape the next era of power are not just the ones with the best apps, the biggest markets, or the strongest central banks. They are the ones that control the materials without which no industrial promise can be fulfilled. Copper sits at the center of that truth because it links almost every major strategic ambition into a single physical dependency. Energy transition depends on it. AI expansion depends on it. Industrial resilience depends on it. Military production depends on it. Housing infrastructure, transport, communications, and manufacturing all depend on it. That means copper scarcity is not sectoral, it is civilizational in scope. If access becomes constrained, the damage spreads everywhere at once. This is why the world should be watching Chinese copper behavior with far greater seriousness than it currently does. The issue is not whether every warehouse figure proves some secret master plan. The issue is that the incentives, the supply conditions, and the geopolitical context all point in the same direction. China has every reason to treat copper as a strategic reserve material. The West has every reason to fear what that implies. And the physical market itself has every characteristic of a system vulnerable to shock. If the crunch arrives in 2026 or around it, the shock will likely unfold in stages. First, procurement anxiety, then price spikes, then delivery delays, then project deferrals, then political blame, Governments that spent years promising fast electrification and industrial revival will confront the ugly fact that industrial strategy without raw material security is theater. Technology firms promising boundless AI expansion will discover that computing infrastructure still requires very old-world substances dug from the earth. Defense planners will encounter the same lesson in even harsher form. Financial capital can accelerate demand, but it cannot abolish geology. And beneath all of that will sit a larger geopolitical humiliation. The West will be forced to confront the degree to which it allowed itself to become materially exposed while congratulating itself for intellectual and financial dominance. It mastered derivatives but neglected ore. It optimized balance sheets but ignored smelters. It celebrated software but outsourced metals. It believed that a world organized around price signals would always deliver whatever the advanced economies required. That belief is now colliding with a world in which rival states pursue strategic stockpiling, supply chain concentration, and industrial coercion with extraordinary discipline. The hidden logic behind China's copper accumulation is therefore bigger than copper alone. It reflects a broader understanding of where power is moving. Real power in the coming decade may belong less to those who can generate the most digital wealth and more to those who can command the physical choke points that the digital world still cannot escape. Metals, energy, shipping routes, processing systems, and industrial inputs are not leftovers from a previous era. They are the hard substrate beneath the future. That is the true warning embedded in this story. The commodity war nobody sees is not invisible because it is small. It is invisible because most people are still trained to look in the wrong direction. They look at apps instead of minds, code instead of conductors, valuation instead of volume, software narratives instead of refinery capacity. Meanwhile, the states that think in material terms continue consolidating the foundations of economic power: one shipment, one contract, one warehouse, and one strategic reserve at a time. If China is indeed hoarding copper in preparation for a tighter, more confrontational industrial future, then the implications are profound. It means Beijing believes scarcity is coming. It means Beijing believes leverage over physical supply will matter more than market orthodoxy admits. And it means the next great geopolitical contest may not begin with a missile launch, a banking panic, or a currency crisis. It may begin with something far quieter and far more devastating. A world suddenly discovering that the metal required to build its future has already been locked away.